Good afternoon, everybody. Welcome to the show. Oh boy, it's been a cold one this weekend in this part of the country. If you're in Ontario, oh boy, we've had some pretty cold nights. Last night, not even last night, all day yesterday, the wind chill, minus 35 to minus 38, depending on the time. So, yeah, we had a little bit of cold. It has warmed up considerably. Right now, I think the wind chill's about minus 26. So that's kind of balmy, I guess. It's not West Coast balmy, that's for sure. But yeah, we've had some interesting cold, and more importantly, guys, oh boy, what a week this has been. We have seen volatility like crazy. We've seen a market going up, going down, going sideways. Um, we've seen crypto head into crypto winter territory and then come back. So, oh boy, yeah, we've had a really interesting week. And of course, it makes me wonder what is this week coming up gonna be? It could be interesting. I do. Monday is kind of that big day, and guys, by the time we get out of here, we should have some early future results, things like that, as to what might be going to happen. But I I'm hoping the recovery we saw on Friday continues into Monday, and I think there's a chance of that. And then we'll then we'll see where the rest of the week goes. But I sure hope I sure hope to have another green day. That would be kind of cool. Um, and we're going to talk a little bit about MSTE of all things as well today. Yikes! So we've had a pretty good day. Um, you know what? Let's jump right into chat. I'm kind of curious to see what your guys' impressions are on this week. Was it good to you? Did you buy the dip? We had multiple dips. Or were you white knuckling it through this week, so holding on for all dear life? Yeah, let me know. Let me know how you guys did. How you guys did on the week. All right. In first today is Brian with a good afternoon, everyone. And we got Bismarcky as well with a good afternoon, all. Brian says, is it still frowned upon to have the baby it's cold outside song in your head? No. There are some Christmas songs that I think shouldn't be Christmas songs. They should be winter songs. Baby, it's cold outside. Sure, that would fit in there. Let It Snow. Frosty the Snowman. There's nothing in there about Christmas. It's just about kids having fun with a magic snowman. So I don't know. Should some of those songs be just considered winter songs? That's kind of what I think. I kind of lean that way. Because a lot of people, when the winter actually gets here and we can use some songs to cheer us up, we've already shut the doors because we've thrown it all into Christmas and saying, those are Christmas songs, we can't have them. Well, I don't know. I think we can. I think we should be able to have them. That's just my opinion. I don't know what you guys think, but that's where I'm sitting at on that. Lance is in the house with a good afternoon, everyone. Brian, trying to work on my shed, and my hands kept freezing. Yeah, I would not go outside today, and I have not. I will not. Jill did. Jill was out there for an hour shoveling. That's it's kind of that thing. She likes to shovel when it comes down to getting in some cardio. Instead, I spent my hour lifting weights, so that's what I prefer. I'd rather to feel the burn, not the cold. Let's see here. Paul's in the house with a good afternoon. We got Samantha with a happy Sunday, everyone. And Sky says, good afternoon. It's funny, guys, early in the life of this channel, when I would be listening, reading off all of the people coming in and saying hi, somebody put the thought in my head that it's like Romper Room and that magic mirror, and that it's like I'm reading off all of the kids' names through the magic mirror. And I've not been able to shake that. I have not been able to shake that. And in the back of my head, I don't always say it, but in the back of my head, every time I go through a list of people at the beginning of a stream, I'm kind of thinking it. I'm like, oh my gosh, it kind of does feel that way. King of Day. It says, hello, everyone. Happy Sunday. Bismarcky, let's hope this is the end of the brutally cold weather. I don't know. Like normally, I think normally January, February, brutal cold, it kind of goes with the game. So obviously, yeah, I mean, the coldest part of the year should be last week of January, first week of February. So we should be out of the worst of the worst, but I don't know. There's a lot of volatility. I think once we move into March, I'll start to get my hopes up. But I will say one thing, guys. It's been so long since I've started the stream and I can look outside and see a blue sky. Right now, there's blue sky there. So the sun has not set yet, and it's nice. The days are getting longer. We're getting some blue in the sky. It's looking pretty good. It's looking pretty good out there. Scott is in the house with a howdy, folks. And Paul, are you cold at -16 versus my +10? Well, right now, I'm actually not super cold. Now, I will tell you guys, you can't see it, but right behind my back on this chair, there's a heated pad. So I get a little bit of extra heat. Some people like to keep their house hot. I'm not one of those people. We tend to keep our house pretty cool. But, we wear layers. I mean, there's no point. Like, I know, like my stepdad, oh boy, whenever I used to be at my mom's place, he loved the heat. And it would be so hot. And even in the summer, it would be like, in the middle of the winter, I'd be sweating to death because it was just so hot. But yeah, no, I don't mind keeping it a little on the cool side in the house. Morley says, good afternoon, everyone. And Lance says, how do you think Tesla will perform this week after shifting more focus to solar cells? I would like to see a good Tesla week. And of course, part of it is I am currently in a trade. And Tesla right now, and here, guys, let me just show you. So Tesla, they've been in this pattern that I'm hoping to see break. And let's head here. Okay, where is Tesla? I know I've got Tesla here somewhere. There we go. All right, well, this here, I'm going to grab this one for one reason. This here is the CDR. So they both behave the same, but the reason I'm grabbing the CDR is because I've got the CDR actually charted. And what we can see here is they're currently, like these are some of the channels that Tesla has been into, but right now they currently were in a descending. They were in a descending channel, but they've broke out of that. So this is kind of that thing. Now, what is interesting is when you look at Friday, they did come back up to pretty close to the channel. And I could even adjust this a little bit, and it could be more like this, but they came back up to this channel and it's now acting as a resistance. So they did, they didn't punch back in. They just, they got turned around. So I'm hoping that they can get themselves back into, I'd like to see them get back at least into this channel here. So I'd like to see a little bit of movement on the upside. And here's the actual Tesla. It's the exact same thing. Just it doesn't have the charts on it. So I'm hoping to see some movement to the upside on Tesla. And I think the more they can get people to focus on anything but, I just realized something, guys. I didn't have the chart up. All right. Well, we did that pretty early. Normally I'm big screen, but I was actually on the right thing. I just didn't actually click the thing on it. I did. Oh boy. So yeah. All right. Back to Tesla. This is the descending chart that they're currently in the channel. And you can sort of see when I was talking about how they broke out of it, they came up and you can see how it reflected. It reflected off of the top of it here. So we do have this acting as a potential resistance that they might have to pump their way through. So we could very well, and here, let me just actually do something here. We could end up seeing a channel. Well, wouldn't it be, this is not normally. Normally when it breaks out, it'll break out and it'll create a channel somewhere else. But it would be very interesting if we actually did get another, let's just extend this, if it broke and formed a new channel, sort of almost a parallel channel, like almost like almost like if they just decided to ride on the other side of the road, Tesla just became British. Um, that might be, well, actually, in this case, they were on the wrong side of the road. Now they're on the right side of the road. So yeah, Tesla became American. Um, yeah, so that could be interesting. I'm not willing to call that yet. I'm thinking it's going to break back in and hopefully get back in this channel. But I'll leave this here, guys, because we can take a look at this on the market close on Monday, and we'll see if it has moved into this new channel. I don't know if I've ever seen, and I've seen a lot of channels. I've never seen a stacked channel like this, so it'd be very interesting if that would happen. Oh, what I would love to have happen is imagine if we could just eliminate this middle line and have it all of a sudden be a much bigger channel. That would be very cool, but that's not going to happen. All right. Coming back, Mario says, good afternoon, everyone. Ottawa is way too cold. It is. It really, really is. Yeah, just saying. It's, I will tell you, there's the worst part of the winter when it's the coldest part. And this is how you can tell. You can say, Candace, are you wearing socks in your slippers? And I will say, yes, I am. Because it's that cold. It's not so bad upstairs, but the lower level is colder. So, yeah, it's cold enough that I'm wearing socks in my slippers. Lance says, it's cold, but we're almost through the worst part of it. Hang in there. Yeah, well, exactly. Samantha says, crazy week indeed. Do you think it's a sign for 2026? Yeah, I do. I will say this, and I think when I was doing my, I think my prediction video, I sort of said that 2026 is going to be sort of a muted version, more of a digesting 2025 type version. So I do think we're going to see more volatility this year. And that, well, that does bode well if you're looking to buy dips. It's like, imagine this. If you had the foresight, and I did not have the foresight for this, but if you had the foresight to see what crypto was going to do in this last week, imagine if you did put a significant chunk of money on MSTE at that bottom when it was like $2 and, when it was around 250. And then sold it at the end of the day, Friday, you would have, let's say you put $100,000, you would have turned that $100,000 into like $130,000. But I'll tell you guys, don't go doing it because that's risky as can be. Because, if crypto continued and did go into crypto winter, you would have lost a lot of money. So you would have been, you could have made it, well, you could have become a YouTuber and you could have called yourself Gary Gill 2. Poor, I got to get Gary on here. One of these days he's going to be watching these like, Candace, stop making fun of me. I can't help it, Gary. I can't. All right. Hay says, hi, Candace. How are you? Warmer days ahead. Yeah, there's definitely going to be warmer days. This is the thing. My favorite time of year is pretty much from beginning of September to the end of December. I love that time of year. And of course, right after it, this is the part I have to pay for enjoying my favorite part of year. But it's fine. We'll be through this. We'll be through this before you know it. I'm just looking like right now that we got a lot of exciting stuff coming up, like on the channel, and hopefully you guys got exciting things in your life, not just with the channel, but with everything else. So I'm looking forward to this year. I think 2026 will be a pretty good year for sure. Yeah. Oh, and this week, guys, we do have the channel members. They get their live stream, and they're also getting an office hour on Monday. Every Monday, the channel members get that office hour. It's super chill, but I'm looking forward to it. I had a lot of fun last Monday. Mary is in the house with a hello all, and guys, Mary is our official captain of the like button, and you can tell there's a little wrench next to her name. So, guys, if you have not yet hit like, now's the time to do it. I'll take a look and see where we're starting at. Now I know on the market closes, we've been trying. I've been trying to get to 70, and Mary's been trying to get to 80. But this is a weekend show. and it's a little longer, so I think we can get higher with the people coming and going. Right now we're sitting at 20.25. All right. You know what? Our first step, let's just get it to 30. Get it to 30 right now while I'm drinking here. I'm going to refresh this here in like a second. Well, not a second, approximately 5.2 seconds. And I want to see 30, guys, please. All right, let's do it. Let's do it. Because this is where the first one is basically just reminding people who normally click like anyway. Oh, guys, 29. I can't believe it. All right. Well, I'll bug you guys in a little bit about that like button, but it does help a lot. And especially if we want to push this out and we want to get a lot of people in. I'd love to break a record today. I don't know if we're gonna, but I would love to break a record. We'll never I don't think we'll ever break the record that we had when Adriano was on the channel, because we got some really big numbers for that one, but I think we can do really, really well. All right. Scott says, in the GTA, I heard we may see temperatures that aren't preceded by a negative sign next week. Oh, ooh, that's interesting. I don't believe that's the case in Ottawa, but you know what? I have Ottawa here, so yeah. Oh, we're at -25 now. Oh, look at this. -3. We're getting close. We're not quite there. Uh-oh. Wait a minute. Oh, boy. Does that say 10 to 15 centimeters of snow? It did. Oh, well. I clicked on it. I clicked it away. There we go. Yeah. 10 to 15. Oh, boy. That's Tuesday. What can I say? Well, at least Jill's workout program will continue to have lots of new workouts dropping for her. Morley says, I asked Gemini. She said, yeah, looks good for tomorrow depending on the US dollar. Okay, well, yeah. Well, I hope Gemini is right. Now, I think actually one of the better ones, I think, if it comes to market prediction, as much as I'm not a big fan of X, but Grok sometimes is pretty good, because Grok will go, basically will scrape X and pull up sort of the general sentiment amongst a lot of different people. There's a lot of people on X. Actually, I think X might be one of my bigger social media networks. I can't remember. How many people? Now I'm curious. How many followers do I have over on X? Oh, no, that's Dropbox. All right. Over on X. I guess I got to go to my profile. Where is my profile? Do I click on the X? I think I just click on X. Gosh. How do I get my, let's see, for you, following, I'll click on the home button, see if that does it. Huh. Oh, well, I don't think I have any, I have no clue. I've got no clue. It's not showing me. I had, like, at one point, back when it was Twitter. So back when it was Twitter, at one point, I had, like, 20,000? I don't know. There was a lot. And right now, I don't know what. There's got to be a way. Oh. Here we go. Well, I'll drag it over. All right, we're still close. 19.2 thousand. Anyway, yeah. So right now, that one has, that's where I have the most presence. Although, I will say something. What's going on there? I just noticed all this movement. I'm just going to go to the big screen here because that movement is distracting me. I don't do a lot over on X. Every so often I go in and I just make some snide comment. That's about it. But I do have a bigger presence there, and I really should talk more on X. Yeah, I really should. So I should make a schedule. Like, make a post on X on Tuesdays, make a post on Blossom on Wednesdays, all of that fun stuff. All right, King of Day says, I put an extra 500 into Bitcoin, but did not buy any other dips. Okay, nice. Samantha says, ended the week in the green, took advantage of the dips to grab a few deals. Yeah, me and you both. So yeah, I certainly, I mean, I enjoyed these dips. I did enjoy these dips. I can definitely say a few of my tech holdings got bigger because of these dips. Brian, the market's going down are just great deals for the long run. Well, it really is. It really is. And that's the mindset. So that's the mindset for new investors. I think the one that you need to learn first is that, you know, red is not a bad color. Red is an opportunity color. You know, while new people into the market are panicking and they're selling things at losses, the smart investor is just sitting there gobbling it up, and then when the markets rebound, they've got more. Those people who sold, well, they've got less. So it's kind of that thing. With every transaction on the I was going to say the internet, but on the stock market, there's two different people in there. There's a buyer and there's a seller. And sometimes that seller is a person who is making a bad mistake, as in panic selling while you're buying. Now there is always that case where it might have been somebody who did buy it at a really low price, so they might still be in a profit, but they're jumping out at that point taking profits, and that's not so bad. But yeah, just I always like to keep that in mind that for every good deal I'm getting, there's somebody who may be giving me that good deal at a loss on their side. All right. Lance says, I read the end of the week will be the opposite of however the beginning of the week starts. I think it also depends on how Japan's LDP handles interest rates in the next few months. Yeah, I think the Japan story, I don't think I don't think we're gonna have any impact of it from this week, but it is something that's simmering in the background, because if they increase interest rates in Japan, that means that these carry trades become expensive. And in some cases, it might even lead to some margin calls and things like that. So there's a lot of investors who are watching that. And if you're somebody who is doing carry trades, I would start looking at it and sort of like saying, okay, how can I minimize my exposure in this area? Because I think that could be a real problem if people just sort of hope it goes away, because I don't think it's gonna. Claude says, hello, I will transfer some HXQ into CMVP next week. I love those champion ETFs they have over at Hamilton. They're pretty darn good. Right, and Lance is going back to Japan again. So Japan just had a snap election, and LDP won, and I think they're in favor of a weaker. Yes, I could be wrong. Well, yeah, we'll have to see. We'll have to sort of see. I always look at it this way. When you get a new government change, I usually don't see them moving right away. Like, they need to come in, sort of assess the lay of the land. Now, that's most governments. There are some exceptions. The current U.S. administration is definitely one. All right. Lisa's in the house with a hi, everyone. The yen, good old yen. Tony says, good afternoon, all. And Dorpat says, felt like minus 30 here in Mississauga this morning. I couldn't walk from church to parking lot. My face froze. Hope we have a better week, both in the markets and weather-wise. Happy Sunday. Yeah, I hope so. I know, it was cold. It was cold. Like, I think Riley at one point, he has not been outside in a while. And I will tell you, this is an interesting thing. He's I think he's roughly 5 now. So 5 in not cat years, but human years. And even last year, it didn't matter how cold it was. He'd go out anyway. He may not have spent a lot of time out there, but he would still go out, spend about 20 minutes, trying to find mice and then coming back, hungry. This year, nope. It's like you open the door, he gets a good whiff of the cold air, and he's just like, nope. And then actually, it's not right away, because he seems to have this belief that there might be different weather at the front door and the back door. So he's got to try both doors. And then once he's tried both doors, then he'll go upstairs, and there's a little heated pad there that he likes to lay on. So yeah, that's pretty much what happens. That's his life until probably March. Doorpat says, what do you think of Shopify earnings on Wednesday? Beat or miss? I am wondering, buy more to bring down my average or wait for a much steeper dip if they miss? Oh boy. Well, first of all, let's actually pull up Shopify. Okay. Here we go. Shop. All right. Here we go. And I'm going to pull up the 6-month chart. So one of the things you have to take into consideration, these are Q4. So here's the good news. This here is not being included in those earnings. So this big drop here, that's a Q1 problem. So when you look at Q4, you're basically looking at this little area in here. So it is share-wise kind of flat, a little bit sideways. So, it's not that bad, but it's not super great. So when I look at this, would I play it? No, I would not. And I'll tell you why, because I don't see anything exciting in there. And I need to see a little bit of excitement if I think that there's going to be exceeding. Now, they might exceed. If they do, it's not going to be by much. And the thing I worry about is, even if they were to exceed earnings and revenue, investors still know about this. And this could somehow reflect, some of this may actually reflect what's been going on with AI, and that might very well reflect in, in their forward projections. And so that could be a problem. So would I play this? No. Would I and when I say no, it's 100% no, I wouldn't play it. I would maybe play after if we get to earnings and they sunk big time. Yeah, I might jump in then. I could play that, but I would not. This is one I would not ride into earnings, and maybe I'm going to be wrong, and that's okay, because I think the risk is enough that for me it's above my risk level. So this is what I wouldn't play going into earnings. Yeah, not showing the screen, take a drink. Okay. You mean every time I don't show the screen, I get to have more coffee? Is that an incentive to not show the screen, Scott? That is good, though. Gursky says, hello, everybody. Whoops. Paul, we keep our heat set to 67 Fahrenheit all the time. Well, that's not bad. That's not too bad. I mean, that is comfortable. Normally, do I want to tell you what we keep our heat at? It depends. It's either 14 or 15 most times, Celsius. So, yeah, but like I said, I'm okay. I'm okay with it. I'd rather be too cold than too hot. And that's the way I look at it. And, if I'm too cold, I can just throw on another layer and be fine. If I'm too hot, there's only so many layers you can take off. All right. Danielle says, good afternoon. Just got back Saturday from 14 days in the Dominican Republic. It's so cold. Looking to invest in emerging markets. Do you think VEE is a good choice? All right. So that is, VEE, it's one of the Vanguard ones. So let's pull it up here. VEE. So Vanguard FTSE Emerging Markets All Cap Index. Perfect. So yeah, this is a good one. This is a good one. Actually, when you look at VEQT, I believe VEQT is actually holding this one in here as well. So as their way to get their emerging market exposure. Now, let's just take a gander here. I think emerging markets have been doing fine. So this here, Liberation Day, it's been on the move up. And this is, I do like emerging markets. I think it is good to have a little bit of exposure to it. So I certainly, I do like V. I like V. So yeah, Danielle, I think that's a good one. All right. Lance says I was number 30. And Pathfinders, I'm 35. Let me take a look here. Oh, could we? So we obviously hit the 30 goal, but maybe we got to 40. Let's just take a look. We're at 41. All right, now we can move towards 50, folks. And like I said, that when you guys click like, it helps the algorithm push this out to more people. So it never, never, never hurts. All right. A says, why do you think there will be a downturn in the U.S. if Japan increases the interest rate? Okay. It's called the carry. It's so basically what has happened in the past is with the Japanese yen, you could borrow with pretty close to a 0% interest rate. And so what a lot of investors were doing is they were going over to Japan and borrowing large sums of money with a next to 0% interest rate, bringing it back to the US markets and investing it. And then they get their returns. So let's say, for example, you invest it and let's say you pull off and these people are probably not using covered calls or things. They're probably looking at more safer bets. But let's say you pull off between 5 and 7%. Well, there you go. You're now making more. So you're basically making 7% on something that you're paying 0% on. So it's just a way of printing free money. That's basically what it turns down to. Now, if all of a sudden those interest rates start going up, well, this deal starts to look a little bit, doesn't look as inviting anymore. So, and it's also, there's more to it than that as well, because when those interest rates start going up, then they have to start looking at paying. You got margin calls and things like that, those type of factors that start to come into play, and it can cause a lot of chaos. So all of a sudden, you've got people who have a whole bunch of money tied up in the U.S. market that they've borrowed from Japan, and all of a sudden they have to start pulling some of that out of the market to give it back to Japan, because of the interest rate situation. So especially if they get margin called on things, that will then result in a net X. Well, I was going to say X flow, an outflow of investor money from the market, which then of course causes the market to fall and puts selling pressure on things. So yeah, it can cause a lot of chaos. But that's kind of in a nutshell. There's a lot more to it. I'm not going to go too much deeper into it. But yeah, it's not a good thing. It's not a good thing. Oh, more coffee. Yeah, there we go. Lance just answered it as well. Because people who borrowed yen will have to pay back and would sell U.S. equities. Yeah, exactly. All right. Agursky says -4 here in Northeast Saskatchewan. Ooh, I like that. I like that. And you know what? Here's the beautiful thing. Northeast Saskatchewan, a -4 is balmy because it's not, it's a dry cold. So it's not that bad. All right. And let's see. We got ourselves a super sticker coming in here, guys. Let me just pull it up. Lance says, too far into the live stream without a goat. Oh, no. Yeah, we haven't seen any goats yet, but that does bring up the Monopoly goat. So we got ourselves a goat. And the Goat Squad is active on the weekend. Awesome. Love to see the goats. And thank you very much, Lance. I appreciate that. All right. Now, where were we before we got goated? That's kind of funny, goated. Pathfinder. Tomorrow I'm planning on pruning my plum trees. Okay. plum tree. Okay, but they're not, yeah, well, to prepare them for plum season. I was going to say, there's no plums growing this time of year. Well, actually, let's backtrack. I don't know the life cycle of a plum. Now, could there be within the plum tree at least the geniosperm of a plum? I'm just thinking. So yeah, anyway, I'm going way too deep into it, Pathfinder. All right, Lance says, so if Japan hikes rates aggressively, I don't think they will. U.S. equities will take another hit. I think it will be a gradual, though. And I think it will. I think the U.S., I hope the U.S. will have a little bit of a conversation with Japan and say, look, guys, you know what? Sure, you want to raise your rates. Let's just do it gradually so that we can kind of absorb this. That might be what happens, but it's hard to say. It's really hard to say. I don't currently know how good relations are with this new, well, it is a new government, so maybe maybe they got a fresh slate. The MSTE went so wrong for Gary. He made a new YouTube channel that is only Bitcoin, MSTE, and crypto. Yeah, Gary has 2 channels now. I saw that. Interesting thing. Because I talk a little bit about swing trading, Jill was actually suggesting that, down the road I might just, have like a swing trading channel in addition to this channel, and then just, put any of the swing trading content there. I don't think I have time to set up a second channel, but it's a thought. It crossed my mind. Doorpat says, wondering what age bracket regular people here are. I'm in 38. Are you 38? Is that what you're saying? Sometimes I am curious why some people prefer covered calls and other growth or hybrid investing, and whether stages in life play a huge role. Okay. That's a fantastic question. That's a great question. Yeah, typically, I don't want to say that this applies for everybody. It doesn't. There's exceptions along the way. But in a nutshell, the longer you have before retirement, the longer runway that you have, the more your priority should be on simply total return, getting as much money as you can for your investing buck. Building up that compounding I was going to say snowman, but the compounding avalanche. You want to just be, or snowball. You want to be building up as much as you can. And a lot of times covered calls are not going to be the ones to get you there. Not necessarily, and I don't want to say all covered calls are not going to get you there. I mean, I would still evaluate it. You take something like HDIV. HDIV did fantastic last year. I mean, that would have been good in anybody's portfolio, no matter what your age is, for example. So, so typically, and here, you know what? I want to do it's time for the whiteboard. I like the whiteboard. All right, you know what I've never done? Let's do it. I've never done a number line. So up here, I'm just going to put R. R is retirement. And then we'll go from I to R. I is, well, when you can first start investing. So obviously, the way I sort of look at it here is, right here, total return is king. Total return is everything. And you're going to, it's still important. Even when you're even when you're retired, it's still important. But during this phase, you're looking at mostly dividend growth. So dividend growth is really good in here. All right, here we go. I am writing with the mouse. Dividend growth. So dividend growth, hugely important. You're looking for those high total returns. You're not really worried. I mean, it's nice to get dividends, but it doesn't matter. Now, here's the thing. If a bear market comes along, let's say a bear market comes along right in here, it doesn't matter. You can just keep on buying. You can keep on adding to your investments at cheaper prices, and that's going to be fantastic. Now, as you start to get older, so as you start to near here, you get to a point where what kind of starts to make sense is your growth income. So growth income investing, that is your hybrid. So growth income starts to make sense because that's where you're sort of, it's kind of like those transitional years. Those transitional years. So in this case here, you are going, you've got some income. And you also have, dividend growth. You want a bit of both. Because you're still growing. You're still growing, but here's the thing. Now, what you might be saying, okay, but what's the difference between this and this? Well, one of the big differences when you've got that longer runaway, you can have more speculation. So you could go with more speculative things. You can go things where you have the time, because you've got a lot of time to, if you make an error, I'll just put more spec. If you make an error, and something doesn't work out, you've got the time. Like it's not the end of your of your investing career, because if maybe you go into one speculative stock that goes to zero. Maybe you do. Hopefully not, but that's not going to destroy you. Whereas if you did that here, it could hurt a lot more because you don't have as much runway. So that way here, so with the dividend growth in this part, you are looking at more, you're looking a lot more at the fundamentals. So you want stuff that is going to be fine. You don't want to take risks, like big risks. So fundamentals become really important in that situation. So the goal is, you can still you can go for something that's speculative, but you don't want it to be really, really speculative. So for example, as you're nearing retirement, I would not be speculating on penny stocks. You could play. I talk with the play money. That's fine. That's just like a tiny, tiny little bit. But if you're like 55 and you've got 10 years to retirement, you probably don't want to put all of your entire portfolio on 2 or 3 penny stocks thinking, I think these 3 are going to make it big, because you could end up completely torpedoing your retirement. And then once you hit retirement, at that point, and we'll just pull this out a bit, at this point here, income is one of the main possibilities. And it really depends on what you're doing. So there's 2 things that can happen at retirement. So one, if you've done really, really well in life, you've got more money than you can shake a stick at, you may not need to convert to income. So it depends on what you're doing at retirement. So let's actually, I'm going to create another line down here. So here is retirement. So here we got, we'll just say you got lots of money. And here you don't have a lot of money. So you got 2 different kind of situations. So if you have a lot of money, if you have pensions, and you've got your CPP is maxed, you got lots of assets, your house is paid off, you don't need a lot of money. If you've got enough money to meet all your needs, then in this situation, guess what? You're not looking at income. You're looking at your heirs. And what I mean by that, is it IE? I don't know. It's like I before E except after C. It is IE, isn't it? Oh, well. IE. I'll put them both here. All right. So you're looking at your heirs, because you've got enough money for yourself. You're doing fine. You're fantastic. So in a case like that, if you're just building generational wealth, you're probably not going into covered calls unless they make sense. Because in this situation, we're going right back to total return and wealth building. I'll put a WB here, and wealth building. So you're looking to continually build and build and build, because this is all going to your kids. Your kids can then, your kids can then figure it out. Depending, I mean, heck, if you have a ton of money and you've got 10 kids, then they'll have a tenth of what you had. But or or maybe you don't like your kids and you're leaving it all to a charity. I mean, it doesn't matter what's happening at this point. But that's sort of comes in this way. Now, most of you, I think, I could be wrong. No, I know some of you are in this category, but most of you are in this category. In this case here, you don't have a lot of money and you are looking at income. And the reason you're looking at income is you need that tax-free income coming out of your TFSA to supplement your OAS. And in some cases, maybe you have a GIS as well. That's kind of going to be the thing that supports your lifestyle. And in that case, yeah, you end up moving to covered call funds or just income investing. I'm just going to call it income because you can do it without covered calls. It's much more difficult, but covered calls tend to be one of the better ways to go. Now, with this, you still want to pay attention. I mean, you still want to, let's pull it back a little bit. You still want to pay attention to some of the things. Like I still say you should still be looking at total return because there are enough covered call funds out there right now that if you've got one that is absolutely tanking on you, well, why are you in it? You don't have to. There's lots of other options. And I like, for me, I like a covered call that if I'm in a bull market, I will look at that covered call and it will tell me whether or not it's successful for what it should be. So in a bull market, that covered call definitely should be making money. And I'm not talking the total return, I'm talking the actual NAV should be going up. It doesn't have to, like if the TSX is going up, went up 30%, it doesn't have to be 30%, because, there are fees in there. Obviously that comes out. But I do want to see some movement. Now, even if it has high dividends, if it's going down, if the TSX went up 30% in a year and this ETF is down 5%, it's not an ETF that's going in my portfolio. Now, the exceptions are if the TSX is going down and then this one's going down. And that sort of comes in. And guys, today I scripted next Friday's video. And next Friday's video, it ties into this, actually, in a way. We're looking at HHIS and QQCL in relation to the NASDAQ. So it's kind of like an ETF battle. Or maybe it's the two of them versus the NASDAQ. We're going to take a look at some stuff because I want to test one thing. One thing that's always said in the covered call community is that covered calls provide downside protection. We're going to explore that in that video. So, mark that one on your calendars. I think it's going to be very interesting. I'll actually be filming that one tomorrow, but it will come out on Friday. Thursday, channel members get to see things one day early. All right, so hopefully, Dorpat, hopefully this answered your question. I may have went into a lot more detail than you had asked for, but, you gave me an opportunity to go to the whiteboard. So what can I do? I love the whiteboard. All right. Gursky says, I got 10 on my gold spins today, but my daughter got 9,000. Oh my God, I got 40. I got 40 on my spins today. I think, was it Lance? Was it you that got, somebody said 190, I thought, on the chat. Yeah, guys, has anybody beat 190 in the community? Let's keep track. As we go through this contest with Wealthsimple, let's keep track because I want to see, holy banana bread. Aaron got 100,000 on his last spin. All right, Aaron wins. The gold, Aaron's winning the gold, guys. Let's just accept it. It's Aaron's gold. I don't know if you're allowed to win more than one though. Maybe Aaron's maybe one coin is Aaron's, and we can all try to win the other coins. Oh boy, nice, Aaron. Wow, that's crazy. That's crazy. I love that. 100,000. Oh my gosh. Oh gosh. And guys, if you're curious what we're talking about, I'm going to drop the link here below for Wealthsimple. So this is my affiliate link. This is a broker. It's a commission-free broker. They're really easy to use. They're really good for beginners for sure. And they got a contest on right now where you can spin a gold coin that's at the bottom of the screen. And every time you do it, you get some entries. And you can get up to 100,000, like good old Aaron just got. But they're giving away gold coins. I think 15 gold coins. I don't know the exact value of each gold coin, but I think in total they're giving away 100,000. So maybe it's like just under 10,000. I'm not sure what the total is. I'd have to double check on that. But guys, it's a contest. Doesn't cost anything to enter it. And gosh, if you aren't already in Wealthsimple and you use that little code I dropped, they'll give you 25 bucks. They'll also throw 25 at the channel as well. So that's always a great way to help support things on this end. All right. Oh, and I missed this one here from Brian. Most I got was 160. I think I got 150. I think that was my highest to date. Roku says only 20 for me today. Lowest ever. Yikes. I do not want to get a day where I get one. I do not want to get just one. I want to pull an Aaron. I want 100,000. Brian says, awesome, getting 100,000. Also, thanks to whoever gifted me a sub to the channel. I have no idea who. But yeah, this group of folks they're pretty good, and I love like, you know what, I love the supers, but when you guys gift memberships to other folks, I love that even more because it's it's awesome, and it gets somebody a chance to get in and see the content and see some of the stuff that goes on in the back end too. All right, Bismarck, he says this is why I dollar cost average buy every week. Nice. It would be nice to win a coin. And according to Roku, yeah, 100,000 is apparently the highest spin you can get. I know. The other day I was saying, yeah, probably only one person will get the 100,000 spin. So that it might be the case. And unless somebody else gets one in the community, I'm going to just assume Aaron's the only one. And those are good odds. Aaron, your odds are really good to win a coin now. Larry says, annoyed I didn't buy MSTRU2X MicroStrat. It's up over 50%. BTC to 77.80 this week. All right, so that I would love to see that. So Larry is anticipating for Bitcoin to go up even higher. Now, that's a great segue to, whoops, not there, here. I want to take a quick look at MSTE. Oh boy, here we go. So MSTE, oh boy, look at this. Look at this. It was down here at 267. There we go. That was low. $2.67. And it went up to $3.55. So just huge. So yeah, Friday it was up in total 32.156%. Now, of course, this is the ETF we've all been giving a lot of guff to because, it's holding strategy, and when Bitcoin crashed, it definitely felt it big time. But I'll tell you, I wanted to feel that pain too. So we voted as a community, yeah, I added 10 shares to the 0 to 100K challenge. But here's the interesting things. I also added 10 shares to, so I keep on the, right now on Wealthsimple, every time one of you guys uses that code, I get 25 that comes in, and I buy something in that account. So, I got a little bit of 60 in there. I got some, what else do I have in there? I think I actually have an HDIV in there, but this time around, I did grab some MSTE, and got it at a pretty cheap price too. But here, I'll show you this one here, because this is, this is actually cheaper than I got it in the challenge. Oops, come on, open up. I added a second fingerprint to my thing here. So, all right, here. Let's go big screen for this so I can show you. Boop-a-doo-doo. All right, here we go. And all right. TFSA, MST, and I just bought 10. That's all. Just all right. There we go. And I'm just going to pull it up here. Yeah, right here. So, oops, there we go. Can you see it? There we go. Yeah. So I'm up 32.16% on the 10 that I bought. So I got it at 273. So 273 here. I just, I was just like, I was just like, I want to try it. And actually, the funny thing is, because of the gold spinning thing, and I was, giving that link out, somebody had jumped on it. So I had that that one come in, and I'm like, I'm just going to buy MSTE with it. I had to, it was good. It was good. So anyway, what can I say? All right, Brian. Oh, guys, one last thing. I was talking about the gold. Let me show you where it is. So if any of you are in there and like, where do I go? Where do I go? All right. So here, I'm just going to go to the home page. There we go. All right. So, all right. So yeah, so from the home page, all you have to do is, whoops, can you see it? Yeah. See that little gold coin at the bottom? That's the one that you spin. So you just spin that little gold coin. I think right now, I've never spun it when I've already done, but there you go. It's spinning. It should say that I've already done it, or it does nothing. It does nothing right now because there we go. Oh, you can still spin it. So if you're bored, you can sit there and spin it as much as you want. But yeah, if I hadn't already done it, then it would give me how many I won. Maybe tomorrow I'll try to save it for the market close, and we can spin it live on the air and see. Whoa, could there be? Is there any such thing to streamer luck? I hear this on the gaming streamers going, "Oh, streamer luck, streamer." We could try that tomorrow in the market close and see if I get 100,000. If I get 100,000, then streamer luck is confirmed. Heck, if I get anything over 200, we'll say streamer luck is confirmed, to be honest. All right. So Brian says some people have to sell for their retirement income no matter what the stock prices are. That's why I'm switching over to mostly dividend stocks. Okay. Yeah, sometimes that does happen. Obviously, if you don't have enough income, well, then you may have to sell, unfortunately. And some people, like there are some people that will tell you, oh gosh, don't be doing them covered calls. You can just sell as you need in retirement, and your growth things will make it. Well, you'll grow enough. Well, conceivably, yes, you could do that, but there's a couple of issues with doing it that way, and I'll give you the issues. One, a lot more work. So you got a lot more work to do as you're pulling things off. And the second issue is that expenses don't wait for the right market conditions. So if in retirement we go into a bear market, all of a sudden you're being forced to sell at a loss. So that's the other problem. But yes, Brian's right. Sometimes there are people that if you just don't have enough income, you don't have a choice. But if you are in that situation, then I also get a little worried because if you do have to pull, if you have to sell stocks to be able to make ends meet, it means each year you're going to have less in your portfolio to live off of. So you will have a limited amount of time. So that does make me worried. Now, I would say if you're in that situation, guys, I would look at finding a fun side hustle, something that you can at least make a little bit of extra money with. It could be something like, well, YouTube. YouTube's a good example. Now it takes a while before you get monetized, but if you've got a hobby or something that you really enjoy doing, that might be an option. And there's tons of other things that you could certainly do. A side hustle way to make a little bit of extra money if you're in that situation. All right, now Pathfinder. Follow the Fear and Greed Index on Blossom Social to know when the market is running too hot versus cooling off, and use the stock unlock screener to find undervalued companies with good management. Yeah, there's a thing. Oh my God, Stock Unlock. I meant to look at that. I did not do it. I did not look at it. I got to do it. But yeah, no, the Fear and Greed Index on Blossom, that's pretty cool. I know where it is on the app. I've never really looked at it here on the, I think it's in here. I think it's under markets. Here we go. Yeah, here it is right here, guys. Oops. Let me share this. All right. Over here on Blossom, yeah, this is the Fear and Greed Index. So right now we're kind of at a neutral. And, and you've also got, where it was a month ago, where it was a year ago. So it gives you some good information. So gives you a general idea. So typically, when we get to greed, that's when people are buying like crazy. A lot of times, that's a good time to be taking profits, to be honest. If you're looking to take profits when things are greedy, that's the time to take them. When we get into a strong fear, when we get a lot of fear on the market, that's the time to be adding, because you're going to get better deals. Because when we get the fear, that's when those people who give into their own psychology, so fear, uncertainty, and doubt, FUD, that's when they start selling. They start selling in fear, and that's when those good deals, there's good deals there. That's a good time to buy. But yeah, this is definitely a good one to look at. And also you can see here, you can see a little bit here of the performance of the market. You got the S&P 500, the Dow Jones, TSX, NASDAQ, and CoinDesk. I'm not worried about CoinDesk, but you've got some good information here. The Blossom app, it's not just a social media app. There's also a lot of good information on it as well. And well, I'm dropping codes like crazy today, but here is my link to Blossom. So if you want to jump on over there, definitely do that. When you get there, be sure to follow me. Like, seriously, follow me, because I will follow you back, and I like to see what you guys are posting. In fact, see this here, my little bell here, these are the people I follow. Oh, look at this. I got 1, 2, 3, there, 4. I got 4 people who just started following me. I've just followed them right on back. So yeah, definitely do that as well. All right, now, I see we got a gifted membership. Samantha has gifted a membership, and who won? Maggie. Maggie won. Congratulations, Maggie. And that, I love this one. I love this one because this is my favorite goat, guys. It is Space Goat. I love Space Goat. I'm doing it twice. I love Space Goat. It's my prerogative. It's my channel, and I'll show Space Goat if I want. Yeah, right. Candace, don't sing on the channel. Thank you. Anyway, thank you very much, Samantha, and congratulations, Maggie. Maggie, you should, today could be your lucky day. You should make sure you spin your gold coin over on Wealthsimple and see if you can win. See if you can win. All right. Scott says, I put away 2 years to pay myself. 3 to 5 is recommended, but I can't stomach that much making 3%. Yeah, absolutely. Now, you see, here's an interesting thing, too. So we talk about emergency funds. So let's say, and we'll go big screen for this. So if you're that person, we were talking about how you could do it without covered calls. If you got, if you're going to sell stocks to survive, well, you could conceivably create an emergency fund. So if you had an emergency fund, not just an emergency fund, you know how we talk about the emergency fund for when things hit, when the poop hits the fan, you lose a job or something like that. But you could always create, and I've never thought about this before. This is a brand new thought in my head. What if you created a bear market emergency fund? So if you had, so let's say you were living off of stocks, and you didn't want, you just don't trust the covered calls, so you don't want the covered calls, but you need income, you need to survive, and so you're going to have to sell stocks, but you're worried, well, what, you realize, yeah, if we go into a bear market, I could be forced to sell things dirt cheap, and that might hurt me overall. So what if you created a bear market emergency fund? So a bear market typically it doesn't go much past a year. So kind of like what Scott was saying, 2 years to pay myself. What if you created like just one part of your fund that is designed to get you through 2 years if there were a bear market? So that way there, you could, it could be something like, for example, you could have cash ETFs. You could have, you could even perhaps, I mean, technically, if it's a 2-year bear emergency fund, you could even use GICs. If you can get good rates, on them, you could use GICs at least for half of the fund, right? For the second half. But anyway, it's just a thought. It was just kind of a thought that popped into my head there when I was reading Scott's, and maybe Scott's what Scott was saying he does. But it popped into my head, and I'm thinking, oh, that's a great idea. Whether Scott had it or not, I'm not sure. Scott, let me know. Was it your idea? It might have been. How far behind am I, by the way? Oh gosh, I am. I'm about 40 minutes behind. I'm going to try to get caught up. Lance says, fair and index is good. I watch BTC over the weekends too. If it drops sharply, something probably happened that we'll see on Monday's market open. Vice versa if it goes up. Yeah, fair enough. All right, I'm going to skip things like this, guys, just because I'm so far behind. But yeah, I like parallel wealth. All right, that's not in my plan. Why am I mostly in cover call for income? Over 65 income is more important than growth. Lance says 2 more days until they give away that 1K gold bar. Who's given? Oh, is that also Wealthsimple? Is that I can't remember what that one was for. Let's see. I hope I'm home when they deliver it. They'll mail it by Canada Post. Oh, I can imagine. All right. Danielle says, hello, Candace. I opened a TFSA for my son with Wealthsimple using your promo code. Oh, thank you. So yeah, I did see that. I didn't know who, but I saw that come in. And I appreciate that. I'm using RBC and thought Wealthsimple would be good for a 19-year-old and no commissions. Any advice on Wealthsimple? My big advice on Wealthsimple is, just, I would say, especially with a new person, I would almost say it's just so easy. That's the only downside to Wealthsimple, is that sometimes it's so easy to go in there. It's so easy to buy, to sell. My big advice is just I would talk to your son and just sort of talk a little bit about having a bit of discipline and not sort of moving things around, and to not lose focus, because sometimes when you're looking at numbers, it can almost feel like you're looking at a video game, but you're not. You're actually looking at hard-earned money. So that's kind of one of those things, is that just make sure he doesn't sort of view it as a game, that he more or less looks at it and says, yeah, okay, this is real money, and I probably shouldn't just be moving things around. And, especially if you're, selling little things at a loss, you're like, oh, I don't like this one anymore, I'm just going to grab this one. A lot of times, you want to be well thought out, have a plan, all of that. All right. Let's see. I see it takes 3 days for the money to be transferred from a bank. For the first time, once he has money in there and he's got a few things invested, they'll give him a certain amount up front. So for example, he may move, let's say he moves $100 in next time, he might have access to 20 immediately. And as his account gets bigger, the amount he has access to immediately gets bigger too. Like right now, I quite literally, anything I move in there, I have full access to. So it doesn't take that long. Oh, and then there's e-transfers. Okay, yeah, there we go. Apparently, according to Brian, yeah, they're almost instant. All right. Let's see. What investment advice would you have for a 19-year-old wanting to have his own business in 2 years? Okay, fair enough. In this case, definitely not covered calls. Kind of like, and I guess the funny thing is I think after you asked this, it's probably when I went to the whiteboard. But yeah, some solid dividend growth is going to be the big thing. Now, in this case here, because you're looking, and this is kind of the interesting thing. I talk about a long runway, but if you're putting money away, that's, it's kind of not geared at retirement at this point. It's kind of geared towards starting a business. So in a sense, that is a shorter runway. So he probably wants to avoid anything that's highly speculative. I would look at the tried and true things like your S&P 500s or your HDIVs, things like that. Things where, well, HDIV is fine because even though that has covered calls, it's outperforming because it's going to be total return related. So I certainly like, and that's something I definitely like. Or even things like, if you want to go really safe, XEQT, VEQT, FEQT, so things like that. I think there's a lot of options in there, and there's a ton. Like there's quite literally a ton of videos on the channel too that you might be able to find something that fits that. Well, you'll definitely be able to find something that fits that situation as well. All right. Pathfinder says, "Hey Candace, what do you think about the VLE movement last week? I believe it still has a long way to run. What do you think? Also, good job, everyone. We're at 42 likes. Are we at 42? I hope we're higher than 42 by now. We were at 41 last time I looked, but I am pretty far behind too. There we are. We're at 57. We're at 57. Let's push it. Let's just get to the 70. Then I will shut up about likes. That's how we can do it. Okay, VLE. Let's take a gander at VLE. All right. So yeah, energy had a good week. I think energy had a pretty solid week. So VLE, here we go. So Valoria Energy, I mean, look at this. I mean, that's not bad. Pull up their 1 year. They've been mostly moving sideways, but this week they have moved up quite a bit. I want to go back to the 3 year for a moment. All right. Oh boy. See, the 3 year actually looks more impressive than the 1 year. Just because you can sort of see they've had some steady movement up, and there's been struggles in energy. So I like the fact that they have maintained this movement to the upside. Now, I don't think that they have any, they don't have any dividend. I was going to say, I don't think they have any dividend. So they're currently still in that growth aspect. And I remember as well, when we look at the key data, this is something I really love. Return on equity. This is a fantastic number, 57.15%. So they're getting it done. They're absolutely getting it done. Return on assets, 32.31. Very little debt, 17% debt to equity. So yeah, I like VLE. I like the movement that they had last week. I don't think they're done. I don't think they're done at all. Now they might have a correction after this big last bout, and and that's healthy. That's healthy, and also very normal. So yeah, I like them. I like them on the long term. All right. Oh, and I just saw something else. We got ourselves a super sticker in from Mary, our captain of the like button. So guys, hit that like button. 139, and here's the beautiful thing that's our third goat. So the goat squad is getting pretty busy today. This is our TSX goat. So we have 4 normal goats, and then we have our seasonal goat, which are Valentine's Day goats. So that goat only has, oh gosh, that goat's going to get retired this week. So, and then we're going to have an Olympic goat. We're going to replace the Valentine's Day goat with the Olympic goat. In fact, I might, if I have time tomorrow, definitely by Tuesday. By Tuesday, I will have the Olympic goat in there too. So if we go to 6, we'll go to the Olympic goat, but that won't be till Tuesday. All right, and while we're at it, Wahipple has gifted a Mountain Finance membership to a Siamese cat. Well, congratulations, Siamese cat, and thank you. I was going to say Gary. Wahipple. Thank you, Wahipple, and that's our math goat. So our math goat has now made a appearance. Nice. We got full goat squad going. Next one up is our seasonal goat. So we may get to see the seasonal goat today. All right. Now, holy banana bread. Where are we? Where are we at? Okay. Let's see here. Oh gosh, I am so far behind, but that's fine, guys. I'm gonna try. So, guys, I may have to skip over something that you say because right now I'm looking, I am about 45 minutes behind. So I'm gonna skip. I will skip some things. Please don't take any offense if I skip yours. But if you have something to say and it's really important, put a QQQ in front of it. I do my best not to skip the QQQs. Also, if you want me to say something or address something immediately, we got the supers. They do that as well. And if you're a channel member, you get that one free super every month. So you can always use that. That counts too. I can get to that right away as well. All right. Holy banana bread. Pierre, welcome to the stream, says, I split my TFSA into income portfolio, so Quest Trade for monthly income, and second portfolio for long-term growth. So Wealthsimple feels good seeing a couple of hundred every month. Nice. Yeah, you can do that, guys. Like, you don't have to have all of your eggs in one broker. So, like I'm saying, like if you have your regular broker, like I've got National Bank, if you've got your regular broker, grab Wealthsimple as well. I mean, it never hurts to have a couple, and that way there you can do things like this. And sometimes for some people it makes a lot of sense to be able to do that. I would like to, and I haven't seen this yet, I don't know if any broker does this, but I'd love to have a broker where you could actually have two separate TFSAs, even if it's just to say, okay, this is my TFSA for A, this is my TFSA for B. I think that would be kind of cool, but I haven't seen that. Guys, let me know if anybody does lets you do that. Progressive investing's in the house with a good afternoon. Paul says, my 14C or 15C is low. 67 is 19.4. Also, what do you think about MSTE? We talked about that. I mean, it's risky. It's a single stock. And it's also aggressive covered calls. It's not one I normally would jump on. Like I have some exposure to it. Well, now I do. And we're outside of the 10 I just bought. I do have exposure to it through HHIS, and I do like HHIS. And you guys will find out, because I know that you guys have given this. Well, some of you have given HHIS a little bit of a little bit of a hard time last week, and that's fine. You know, tech was down and it was down, so it certainly deserved it. But yeah, well, you guys, next Friday, that video, we're going to address that. We're going to look at HHIS, and we're going to see, you know, did it do what it was designed to do, or did it fall completely flat? You know, I'm going to hold nothing back, nothing back. Brian, the one and only pot stock that I have is on the Vancouver market, ticket symbol love. It's in the process of being added to the TSX. Profitable company. It's worth a look if the ad helps the price. Okay, cool. I don't know if I've ever looked. I think I know I've seen it, but let's pull it up. Let's jump on. Let's bring some love to the channel. So Canara Biotech. Okay, well, yeah, it's kind of close to a penny stock, but 186. That's like a mega cop for for a cannabis stock. Just that's a joke. Yeah, let's see what it's. All right. So yeah, well, it is profitable. We actually have earnings per share, so that's kind of nice. Looking at the back end though, how is that debt looking? Not that bad actually. 25% debt to equity ratio. Return on equity 11.70. Yeah, it's not bad. All right. Michael, what great question. Michael says, was Friday a dead cat bounce? That I'm hearing many saying that wasn't known reason for this type of rally unless being Super Bowl weekend was the reason. Oh, that's right. It's a Super Bowl. I forgot. I don't think it was a dead cat bounce. For one, I don't think we're heading into a bear market at this moment. I think we're fine. It's kind of, so all right, let me pull something up here for a second. Actually, well, let's go over here. We're going to head over to the TSX. All right, and can I make this a little... all right, now I don't think I can. Here's the whole thing. Like when you look at this week, right? You know, even just look at this month. Up, down, up, down. So, and it's funny, these downs actually were the morning. So this was a morning, then rebound, morning, rebound. Then we had this morning. So we had our bad day, but then we got our rebound after this. So is it a dead cat bounce? No, it really doesn't look like a dead cat bounce. Normally a dead cat bounce happens when, well, happens when we get a little bit more downward pressure. Because right now, let's just take a look. Guess what? Right up here, this is the all-time high for the TSX. So when you think about a bear market, you think about a dead cat bounce, it's not happening in anywheres in here. We'd be looking at a dead cat bounce down in here maybe. But no, I don't think it's a dead cat bounce. Now, there are a lot of people on the internet who will give you the most negative version they can think of. And I'll tell you why. I'll tell you why right now. Why do so many YouTubers tell you the sky is falling? Because you clicked on it, that's why. Doom and gloom gets clicks, and that's what they're doing. I'm not gonna create it. Like, I will not create a thumbnail with nuclear explosions and fire exploding everywhere on it and tell you that the world is gonna end and the markets are going, you know, going by way of the dodo. I'm never gonna do that, guys. I'm gonna give you the truth. You know, if I make a thumbnail, if I can't sell it in the video, then that thumbnail's not getting used. I'm just not going to do it. But that's, well, I don't know. There's a lot though that, you know, yeah, they will do it. Let me give you an example. Guys, let me give you an example. All right. Sorry, Candace, I have to leave your channel. Yeah, sorry, me. All right. We're going to take a look at, and I'm going to pick on Meet Kevin because he's a big boy and he can take it. Here we go. Let's just look at his thumbnails. Look at this one. Look at this one. Collapse begins, New World Order. Come on. But for the most part, like, look at all of these. These are, you know, these are kind of where he's going. Pretty much, buildings on fire. How many times have we seen? Look, just in the last week. There's one. We're just going to count the ones with fire. 2, 3, and I don't know what that green thing is, but all right. So we're, you know, the thing is, those make people want to click. All of that fire, the brimstone, the world's coming to an end. Yeah, I'm not going to do that to you guys. It's like, if I see a bear market coming, I'll tell you I see a bear market coming. I'm probably not going to tell you with fire, but I will, you know, I will definitely let you guys know. I will definitely keep things real for you guys. And, you know, I'm going to be, even in a bear market when things are going down, you know what? I'm going to be that calm voice. I'm going to be the one that's going to tell you how it is. I'm going to tell you what to expect. I'm not going to tell you, oh my God, the world is falling apart. We're doomed. The markets. I'm never going to do that to you guys. Because like I said, a bear market has its own opportunities. It's a part of the natural cycle. And that's how we're going to treat it on this channel, as part of the natural cycle. And how do you survive in it? We'll talk about it for sure. All right. Michael says, hello, Candace. Any thoughts as to whether Headwater Energy will rise higher, as I'm up about 80% and thinking of taking profits? All right. So Headwater Energy, let's take a look first. I need to see what that looks like. All right. Headwater, I think it's HW. Yeah, well, I'll just type in Headwater. Yeah, here we go. HWX. All right. So here we go. Let's pull this up. I'm going to pull up the 1 year. So yeah, they've been moving really well. So they're kind of a lot like the Valoria Energy. I like this movement. I think they can continue. Yes. Will there be any correction? Maybe. There may be. And that would make sense. I mean, look at this. Like, every time they come up, they move a little sideways. Come up, and they're almost like they are moving sideways. But could this be all that they're going to do? Could they go a little lower? Hard to say. It's hard to say. So I think it looks to me like, you know, and I guess, and I'm going to take a look at their back end as well, just because I haven't done that yet. Oh, I love this. Very little debt, 3% debt to equity. 24% on the return on equity. And this one actually has a dividend as well. So I don't know. If you're enjoying that dividend, I think this is one to hold on to, Michael. That's what I would do. I probably would hold this one. All right. Lance says, do you think higher MERS on some of the cover call ETFs are worth it, opposed to just holding XDiv? Well, it depends on what your goals are, though, Lance. So, yes, you are paying higher MER, so management expense ratios. Now, there's a reason, of course. Obviously, to write covered calls, it's more energy. It basically takes more manpower to do it, so there are costs involved. So that, of course, adds into the MER. And if they add leverage, so if you've got like a 25% leverage, and a lot of ETFs are doing that now, you also have the borrowing costs. Like they can't borrow that extra 25% for free, even in Japan now, apparently. But yeah, it costs a bit more. Now, you have to sort of weigh what you're getting with, what you're paying. Now, I kind of look at it this way. Some people obsess over the fees. And I've heard people go on about it and say, okay, yeah, but if you look at how much money that's compounding over the lifetime of how long you're holding it, it becomes significant. Well, yeah, sure it does. But I look at it this way. If I take something else that has lower fees but it's not making as much money, if I compound the amount I'm not getting between the two over that time, it's actually a bigger number. So I like to look, for me, the bottom line is always going to be total return. If I'm happy with the returns I'm getting on something, if it's checking my boxes, I don't care what the fees are. I really don't. Now, if I have two funds that are both giving me exactly what I want, and one of them has a higher fee, well, maybe I'll go with the lower fee one. But at the same time, I could ask this question. If they're both providing me the same return, but this one's charging me, charging me more, what does that mean? Why are they only giving me that? And that might be the reasoning. You see, it's not that one is higher and one's lower. It might be, well, this one is costing a bit more to do the same thing as this one. So maybe this one's being more efficient. So there's many ways you can sort of look at it. But for me, the total return, that's everything. And I don't care what the fees are. Like a lot of people complain about Canoe. Oh, do you know that there's some fees on the back end of Canoe? Well, of course, there's fees on everything. So if you look at a stock, any stock, so you might think, okay, well, yeah, ETFs have fees. That's terrible. Well, companies got to get paid. But here's the thing. If you look at any stock, and we'll pick one, Air Canada. Well, guess what? Does Air Canada have fees? Most people would say no, but no, of course they do. It costs money. Everything that it costs to run Air Canada, that's all taken out of that stock price. So that all is part of that calculation for whatever their end stock price is, because it all comes out of the market cap. And that determines what that stock price is. So you are paying, no matter what you invest in on the internet, I hate to break it to you, you are getting feed. Fees are everywhere. So there's nothing you can do about them. Just a lot of them, just with regular stocks, they're hidden. And when it comes to ETFs, you do see they are a little more transparent. But at the same time, it's like, yeah, you know what? I look at it this way. If I need that income, I got two options. I could do all of the cover calls myself. I don't want to. I don't want that hassle. Or I could pay a small fee, and I'm okay with that. And, that's just where I'm coming from. All right. Michael says, how many people have homes or car pay off? Well, it depends. I think, like, when you get closer to, and in some cases, like my mom, she just went and sold her house. It was like, once my stepdad died, there was no room. There really wasn't any room. I mean, I don't want to say there was lots of room, but there wasn't any room for the house and all of the work that running a house required in my mom's life. So she just got she's just renting a smaller place, and she's put that money into her investments. So that's kind of cool. All right. Let's see here. And guys, I am really, really far behind, so I'm going to be jumping, like I said, I'm going to be jumping over people. A says, I see NAV for most ETF as being the same as their stock on a daily basis. Is there a more accurate way to measure NAV? Okay, so net asset value, it's kind of a relic from mutual funds. So let me explain. So a mutual fund is, they used to trade once a day. So no matter what would happen, they would have what was called a net asset value, and that value would update at the close of every day. So when you were actually buying a mutual fund in the middle of the day, you knew what the net asset value from the previous day was, and you might, you don't know what you're going to actually. So you would put in an order to buy, and you would, at the end of the day, they would process it with the new NAV. So you may not get as many as you want, depending on how that NAV changes. So when ETFs came along, so yeah, they still have a NAV, and that NAV is updated at the end of the day, just like a mutual fund, because that was kind of the basis point, the jump-off point for ETFs. But the price, the most important thing is the actual price, the way the price moves. Some people will look at the NAV and look at the price and the comparison and use that as a way to get kind of to gauge what that fund is doing. So for the most part, it's not that important. Now, unless you're talking split core, like if you're looking at split core shares, the NAV is very important because the combined NAV between the Class A share and the preferred share, if that combined NAV falls under $15, they cut dividends on the Class A shares. So very important to know in that case. But for the most part, the NAV not that important as the price. But sometimes if you do see the price above the NAV, well then it's probably had a really good day. And you also have to keep in mind too that the NAV, so the NAV on the website, they may not even update it every day for you. It may be updated internally, but they don't always update it on their website. So when you look at a website, it'll tell you as at. It'll say, and it'll give you a date. So for example, let's just grab, you know what? Let's grab a random ETF. Let's see here. Let's go this one. It's a Hamilton one. I don't know what one it is. All right, so this is MIX. So the Hamilton Mixed Asset ETF. All right, we come in here, and let's see here. So here's the NAV 2016, and here's the date as at February 5th. So that would have been the NAV on February 5th, but obviously February 6th happened, but it's not showing it. So that's, that kind of gives you a general idea. All right, let's see here. Doorpat says, that was super useful, Candace. Thanks a lot. So for now, I'll focus on total growth. Absolutely. All right, I'm going to jump ahead here. Moonlight, hi, Candace. What do you think of MDA? I feel like I missed the boat on RKLB. So that's Rocket Lab, and ASTS, especially with the conversion rate. So MDA, that's MDA space. I like MDA. Actually, I think I listed MDA as a company to watch this year. Whoops, where am I at? Where is my... Oh, you know what? That's why. I brought that page up, the Hamilton page up over top of my thing. But all right, MDA space. Here we go. All right, so yeah, currently right now it's down a little bit. But one of the things I like about MDA, and I'm going to pull up the 3-year just to give you a better idea. So MDA, they're really going to be big, especially in some of our Arctic infrastructure, some of the defense stuff that's going to come out. So I think they're going to benefit big time for that. Now, at this point, like this big drop in here, that's because they went and lost a big deal to SpaceX. So that is part of it. But, I think this big one up here, they gained, I think there was another U.S. defense one that they did gain. We're going to see some movement on this one. And I think through the year, overall, I think this year will be half decent for them. So I like them. It might be a little bit of maybe a knuckle rider a little bit of the year as we wait for things to come through. The big thing is, too, is we got to see the current government needs to start following through on this infrastructure building. And, I want to see a little bit more of that defense. And when that starts following through, I think this is going to be really good for MDA space. All right. Hi, Candace. What are your thoughts on Evolve's suite of ultra-yield ETFs, says Frank. I think they have, for the most part, their dividends are pretty aggressive. So the cover call writing on them are very aggressive. So we have like Biggie. Biggie hasn't performed as well as I would like to have seen it so far. And I think I think they will do some retooling over some of the ultra yield. Now, Sixy's been doing well. If there's any highlight in there, I think Sixy right now is definitely a highlight. And, let's pull Sixy up here. And I won't bring the 1 year. Let's go to the 3 month. Sixy's done fine. Like, with any fund in this line, I think if they're going sideways, it's not a bad thing because you are getting very aggressive covered calls. So to me, that's pretty good. So Sixy right now, they're doing okay. I think Inti is off. How is Inti off? Like, I know I did add Inti to the challenge, but let's take a look. So Inti as well, I'm liking. Yeah, like Inti had a pretty good day on Friday, up 4.30%. But let's pull up the 1 month because they haven't been around that long. Now they are down from their launch, though. I will say that, but I'm still liking them a little bit. The problem is right now is like none of them have a good enough history to really get a feel for how they're going. And I also keep in mind, these type of things, I think Evolve is smart. Like Evolve, they're a very good management company. If Biggie continues to underperform, they're going to make some changes. I can see it. I can feel that already. And I think I think that would be wise. I would retool Biggie a little bit. I think Canny is doing okay. It could probably still be retooled, but Canny, I think, is doing like Canny, and Canny, here's the thing about Canny. I mean, the Canadian market has been so strong that, you expect Canny to have been strong. And let's pull up Canny. And we'll go to the all right, we'll go to the 6 months here. And yeah, this is slightly disappointing. I will say that. So I actually thought it was doing a little better than this, but I would certainly like total returns. They're in the green. They're in the green with total returns because these are all aggressive, and that's where Evolve may have to look at this and sort of say, okay, what's working, what's not. So obviously, I think Shopify is in here, and they've had, there's been some pretty big hits in Canadian tech. Oh boy, really big hits. And I think that might be, certainly impacting. Because if you look at other funds, so let me show you a similar fund, but one that's actually doing a little better. This here is C-Day. So this is the Hamilton one. So C-Day, this is their Enhanced Canadian Equity Day Max ETF. And let's look at its 6 months. This is what I would be expecting. I would like to see this type of movement with Canny. So what is it that C-Day is getting right that that Canny is not? And those are the type of questions I'm hoping that the developers and the fund managers are asking over at Evolve on these ones, because I'd like to see them do a little bit better. So yeah, right now, other than Sixy and hopefully Inti, it's so hard to tell. Sixy right now is the only one that I'm excited about at this point. So I do want to see better movement on these. And if it means retooling them, that's what I want to see. All right, Progressive says if Monday or Tuesday we see the same low as Thursday, that would be a dead cat bounce. Yeah, and I don't think we're going to. I just don't think we're going to. Maybe a special bell ring for Aaron's 100K spin. This bell has only been rung for the market close, Roku. You know what? If Aaron wins a gold coin, then yeah. If Aaron, if you win, let us know. You will get a bell ring. You'll get a bell ring for winning. And with 100K, I think you have a better chance than most people. All right, let's see here. Paul, last week I sold my blocks ETF to MSTE, 336 cost. Last 3 months, MST went down 2x, more than blocks. So they were both losers between Harvest, TSLY, and MSTE, 50% for RIF income and 50% to buy HDIV. Ooh, I like the HDIV. We'll have to see if MSTE drops the monthly distribution. Yeah, that'll be something definitely worth watching. You know, it's not outside the realm of possibilities, that's for sure. Paul says buying MSTE at the possible bottom could be like buying Tesla for 220 in April of 2025. Maybe. Let's see. I'm waiting on the sidelines in case there is more negative pressure. And let's see, bought Tesla at 180 and sold it at 440-ish. Oh, that's a good return. I like that. I believe DBO is going to get a bump soon. What are your thoughts on DBOX? DBO. Oh boy. Let's pull it up. So DBOX Technologies. Yeah, well, Class A. All right, interesting. Interesting. I will say I don't know anything about DBOX going into this. I just want to be very clear on that. Penny stock. So as you know, I'm not very big on penny stocks. Now, I noticed Class A, well, or no, it's Class A common shares. Okay. Well, they're profitable. That I can give them the profitability. But I'm very leery on penny stocks for the simple reason that when you have something that is just not a big stock, and you can take a look here. When you take a look at their market cap, it's like 193 million. They can respond negatively or positively a lot faster for sure. That's why some people like to try to make some money on them. I find them risky as can be, but this one is profitable, so it's got that going for it. I like that. When we take a look at its debt, yeah, that's not bad either. So 18% debt to equity. So there we go. There's two pluses. And the return on equity, 46.12. I like it. So I like its fundamentals. I will give you that. I like the fundamentals. A little leery that it's a penny stock, but you know, it may not be a bad one to look at if you are playing penny stocks, because, like I said, if you're gonna dabble in penny stocks, at least dabble in ones that have good fundamentals. This one has good fundamentals, not bad. So yeah, it's hard to say how it is going to, if it's going to get a bump soon. That I don't know. All right, now I'm going to jump ahead a little bit here, guys, because like I said, I'm really far behind. All right, Brian's heading back out into the cold. Uh-oh. Is trading HND allowed in your RRSP? Yeah, you can trade. The RRSP has like pretty much out of all trading accounts, the least amount of rules. Because here's the thing about the RRSP. Everything you make in there is 100% taxable. So they don't have there's no tax considerations or anything like that. So yeah, there's no reason why you couldn't. But I'll tell you, you want to be careful with leverage in there, because, you know, you don't get that space back if you lose it. You know, it is a dangerous place. So is it allowed? Yes. Is it advisable? Probably not. Pathfinder, I believe the Fear Greed Index also gives a good indication for the rotation of cyclical stocks. Could this be true? Yeah, I mean, it could be. It could be to a certain extent. But keep in mind, I want to say it could be, but it's not going to be 100% accurate in any way, shape, or form. All right. Tony says, I do not understand the aversion to covered calls. Started with EIT 20 years ago, never missed or reduced their dividend, is up from $9 when I started buying to over $16.50 now. Yeah, no, I mean, yeah, EIT. So Canoe EIT. I love Canoe. Canoe is really good. They're good at what they do. Yeah, the only complaint I think a lot of modern investors have is they're like, come on, Canoe, give us 11 cents. But no, Canoe has been very reliable, and, you know, there's a reason I hold a good amount of it. It's never wavered. It's never let me down. So yeah, I like Canoe. Now, back in the old days, then you would know this, Canoe was kind of, it was kind of like the front of income investing. It really was, because you didn't have all of the explosion of covered call funds and everything else. So yeah, I'm a big fan of Canoe. Actually, the very first video on my channel that ever gave me a good amount of traction was a Canoe video. So there's that too. Scott, not originally my idea, but that's what I was thinking. Mine's not emergency. It's my cash wedge in retirement. Yeah, exactly. No, I like that idea. Going back to, I'm like thinking here like, oh yeah, that was 40 minutes ago. All right. All right, let's just see here. I'm going to quickly jump over a few things here. I'm just seeing if there's anything in here. Scott saying cover calls get the bad rap that they suffer NAV erosion because the distributions are categorized as return of capital. They are, but you got to realize when you see the word return of capital, there's a lot of things that get characterized as return of capital when you're looking at a cover call fund. Pretty much, see, return of capital is if it's not something specific. So, for example, if it's not a capital gain, if it's not foreign income, or interest, it basically then gets kind of catch-all into return of capital. So return of capital is more of a catch-all phrase. And people hear, and the name, because of the name of it, perhaps I wish they would have called it something different. It makes people think that, hey, this is them just giving back your own cash. Well, some of it you could argue, but I mean, it's kind of this whole thing. Like, because there's return of capital, people think that, okay, well, eventually my ETF has to go to zero, because if they keep returning the capital to me, then, it's going to go all the way down to zero. And that's not even true. So I don't like that word, Now, I know Adriano hates the word NAV erosion. I like the word NAV erosion, because if you've got a bad fund, so remember when I said I will not invest in a cover call ETF that is losing NAV while the underlying assets are performing. So, in a bull market, to me, that is true NAV erosion in that case. I think that word fits fine. But people, I think, use it very loosely. So, I'll give them credit in that area, but what can I say? I love this. Great Chalice says, no pain counting my dividends. Yep, absolutely. Elaine is in the house. Hey, all. Got in before the end. Happy Sunday. Oh, my gosh, yeah. This one may go a while. I still have to get caught up. Scott says, a Siamese cat reminds me of Lady and the Tramp, which could not get made today with that song. Maybe, yeah. 4 goats equal a Tuesday show. Oh, Steve, what are you trying to do? Oh, we do. Well, you know what? We need a Tuesday show. So, I'll say this. If we get one more goat and get the Valentine's Day goat, I'll call the Tuesday. That way there everybody can see the Valentine's goat. So, Steve, you know what to do. You know what to do. Paul says Questrade allows more than one TFSA and you can rename them. Okay, there we go. Perfect. I've never got to experience Questrade because I tried to sign up and it didn't work. Robert said, haven't invested, but could I buy Harvest ETF through Wealthsimple, or is there a better option in holding it in a TFSA? Yeah, Wealthsimple. You can get any of the Harvest. Exactly. So yeah, basically, if you sign up with Wealthsimple, once you got to fund it, of course, get some money in there, and then yeah, you could buy pretty much. There's probably, I can't even think of any ETFs that you can't buy at Wealthsimple. I think at one point though, there used to be some stocks you couldn't buy, like Disney. Like back around the beginning of the pandemic, Disney was one of the stocks you couldn't buy on Wealthsimple. But right now, for the most part, I think there's a couple very bizarre ones you can't get. But yeah, Harvest absolutely is fine. All right. Michael says PED is an oil company with new oil wells that break even the that break even that made $69,000 in profit from having interest in some type of account. Okay, there we go. USA PMI above 50 is macro bull, and PMI below is macro bear. USA PMI is 52 or so. Yeah, like I said, I don't feel like a bear market's coming at this moment. I mean, one is always coming, but I don't think it's going to be here this year. All right, HWX looks like it may continue, although lots of insider selling and big insider ownership. HWX looks like a decent play with high profitability and an okay valuation. Okay. Yeah, let's see here. Michael says over 1 million jobs was lost last year in the tech sector, and I hear on many saying consumers cutting back that lower the outlook than say going to do layoff is what worries me. Yeah, well, get used to layoffs, Michael. Get used to layoffs. They're going to be very normal for the next little while. If AI continues to advance as fast as it's been advancing, yeah, layoffs are coming. Layoffs are coming, guys. And that's an interesting thing. So with the jobs numbers in Canada, they dropped this week. And we lost 25,000 jobs. But this is the funny thing. So we lost 25,000 jobs, but guess what? Unemployment actually went down. So you might be thinking, huh? Well, it's a simple reason. Unemployment only tracks people who are actively looking for a job. Those who basically fall off of unemployment, who are no longer technically they may still be looking for jobs, but they just aren't they're not on the consumer rolls anymore. Those people no longer count. So a whole bunch of people fell off. So they're kind of those people who no longer have EI. So it's not as good as it sounds. That's what I'm kind of getting to. And who knows? I think as AI continues and as because there's so many things, like you can do so much stuff with AI. It's absolutely crazy. And yeah, if I had a business, I would be asking my employees to use AI. I mean, especially if you can get a lot more productivity out of them, and then that means you don't need as many employees. Bottom line is what it always comes down to in business. So yeah, there's going to be a lot of people that lose jobs, unfortunately. So, people will have to figure out things to do. Maybe it might be retraining, because with a transformative technology as well, like a lot of times as jobs are lost, new jobs are created. So what I would recommend for you guys who are still working is, if you're that person who doesn't know how to use AI, I would learn how to use AI, because if you can use AI to make your job more productive, you're not going to be one of the first going. It's the people who just don't adapt to AI. Those will be the first people who get let go. So it's definitely a good idea to learn a little bit about AI. All right. QQQ. I love this. What's the difference between buying DOL, WSB, WCN, etc., and selling small amounts versus collecting a 5% dividend? One goes up 30% a year but takes more work. If you have things moving up, there's not a lot of difference. So that's the thing, and that's kind of where I was getting at. So yeah, if you want to do that in retirement, if you're like, okay, I don't want to touch covered calls, I'm just going to stick with some of my big growth stocks, so Dollarama or WCN, and I'll just peel a little bit off, enough to survive. And that's fantastic. That's fantastic. But if you have to peel off a specific amount each year, and we go into a bear market and everything goes down 25%, that's where this strategy can get into a problem. So you're saying, yeah, it goes up 30% a year on average, but that's the thing. So in a bear market, maybe not so much. And you may be forced to take a loss, and that could certainly hurt your portfolio. Now, we were talking a little bit about like an emergency fund for a bear market. You could do something like that and build an emergency fund for a bear market. So you can work around it, but it's a lot of extra work. So, and I want to be clear, like no investing type is wrong. Well, maybe going all in on penny stocks just before you're ready to retire. That's probably not a good move. But for the most part, there's more than one way to, be successful in how you do it. And the big thing really, honestly, is to be aware of what can happen and be aware of what that worst case scenario is. Because if you've planned for the worst case scenario and you're still fine, then you're going to be fine. So that's kind of that neat little thing about that. I like that. All right, now we got a couple things going on here. All right, Paul is in with a $1 super. So I guess Paul wanted to get the Tuesday show in the bag. There we go. We're all good. We're all good. And that does release. Well, that releases our seasonal goat. Our little Valentine's Day goat is spreading some love. Spreading some love. I love it. All right. And Scratch came in at the same time. Tuesday Live matters. Oh boy, Scratch. That's funny. But yeah, and that is another goat. Now, I don't have another goat, but guys, the Beaver Army is willing to stand up for this one. So there we go. I need the sixth goat. I need the sixth goat for every time Scratch jumps in at the same time as whoever's hitting out the last one. But thank you, Paul. Thank you, Scratch. All right, now where the banana bread were we at? All right, right here. Wahipple. I just finished updating my Blossom if you want to check it out. Okay. Wahipple went and updated Blossom. All right, let's go over to Blossom. Let's take a gander here. That's Discord. Where is my Blossom? Oh, right over here. I was on leaderboards. That's why. I was looking for Blossom. Let's just type in Wahipple. And here we are, right here. All right, so Wahipple. Oh boy. So yeah, this is kind of great, guys. So this here is Wahipple's Blossom, and it shows you, shows you his portfolio. Like he's got 19 in here, so look at that. Very, very cool. Look at that, oh boy, you've got a lot of confidence in 60. You've got 60 right here at the top, 45%. Let's take a look at this whole thing here. We got 60, Canadian. Somebody really loves banks. And I will say this. The Canadian banking system, they're top notch worldwide. They're top notch. So I have a lot of faith in our Canadian banking system, and obviously so does Wahipple. Yeah, we got CIBC, TD, BNS. All right, there's Peyto, exploration and development. So a little bit of oil in there, but then back to the banks. Oh wow. Ooh, I like seeing the AGCC in there. Of course, that's our new. The Global X Silver. It's sort of like if you like GLCC, this is the same thing, but with silver. All right, okay, we got some INTY in here, and then there's your canny. All right, Loblaws, HYLD. I like it. I like it. eBay. I'm surprised. Wahipple, with your love for banks, I'm actually surprised. I thought eBank would have been a little higher. We got HDIV, CPCC. All right, let's see here. Let's see, we got, and that one, there's our copper one. And of course, I'm pretty bullish on copper. And then we got bank in here, pretty low, VDY, HHIC. HHIC has actually done really well. I'm pretty impressed with what they've done. But yeah, definitely a financially focused portfolio for sure. So kind of interesting. And it is interesting too, because you got some income in here. You've also got some good amount of growth. So definitely a growth. It's looking like it's probably looks like you're going for growth dividend, or growth income, sorry. And I love that. I think it's it's a nice little portfolio for sure. All right, Pathfinder says 69. Are we one away from that 70? I'm sure we have 70 now, because you said 69. So that spurred somebody to hit it. Yeah, we're over 70. I'm not talking about likes anymore, guys. Mary might come in and talk about it, but I'm good. Let's see, for my TFSA, the Evolves Ultra yeah, all-star. It's like your top performer there for sure. I do like it. I do like it. And I hope it continues to perform for sure. Xenial Canny has been disappointing. It can't seem to stay at or above the inception price of 25 yet. 60 has been their best product so far. Yeah, 60 has been really, really good. Now keep in mind, Bank, their other bank one. Now that one also has the life codes in it, but that has been really, really good. Tom says, "Do you think we'll get out of Tesla this week?" I sure hope so. I sure hope so. All right. A says open text has been down by double digits. Open text, yeah. Canadian tech overall has really taken a big hit. They've taken a big hit today. Wahippo, C day is zero time to expiry. So they've actually done pretty good. They've done pretty good. I like that whole concept. I like the whole concept of the day max. How far can CNQ go? Went up $10 within 1 month. Yeah, but CNQ, here's the thing, let's jump on over to CNQ here for a moment. Like CNQ, they're a great company. Like, this is a great company, one of my favorites. Now, I'm coming back to the 5-year. And so when you look at things, like, you might say, how high can they go? They've been here before everything else happened. So when you look back here, well, this is almost 2 years ago. They were up. They made it all the way up to 55. Then, of course, oil struggled the last couple of years. So they've actually considered the fact that they're where they're at right now. I think that's a good indication that they're pretty strong. So how far can they go? I think that they're worth at least $60. So I could see them. I could see them easily by the summer. I could see them be trading around $60. But, let's see what happens with oil. That's the one problem, is that no matter how much it's worth, they can certainly trade. They can certainly go down if that sector is being hit pretty bad. All right. Mario says, AI is going to be involved in every field. Is like the internet boom back years ago. It's bigger than the internet boom. And here's the beautiful, I don't know, maybe this isn't a beautiful thing, guys, but we've got two big booms coming at us. We got AI, which we're in the process of, and right up next is going to be quantum computing. So just get ready. Just get ready, guys. If you don't like change, you're not going to like the next 10 years. I'm just going to say this. You're not going to like the next 10 years because it's going to be, I believe, and I honestly believe this, I think the world in 10 years' time from now, that world, I think, is probably for a lot of people today unrecognizable. So it's going to be very interesting. All right. And Scratch is saying AI will not come as fast as people think because of energy resources constraints, in my opinion. Well, here's the thing. So yes, right now there are problems with energy. Heck, even OpenAI recently said that they don't think NVIDIA's chips are good enough for what they want them to do. So that was kind of a shot at NVIDIA that OpenAI made. But once we move in, and this is where, once we start getting quantum moving forward, quantum can do the same, can do a lot more. So the amount of processing a regular chip can do, a quantum can do a ton more processing with a single chip. So what does that mean? Well, that means even if, and let's just say both chips require the same amount of power, if one chip can do like 1,000 times what that other chip does, you don't need as many chips overall. So you could actually have lower powered systems doing much more work and being much more productive than the current regular type of chips. Now, my understanding, and correct me if I'm wrong, but my understanding are quantum chips, even if you go same amount of processors, or the same amount of switches, so on, off, or in this case here to a qubit, is less energy just because of the way they function. So overall, we can get into a situation where the second wave that's coming after AI could actually reinforce AI, and with less power. So the power thing is going to be very, very interesting. And I also have a feeling that a lot of the power innovations that people are trying to find out, I think as AI gets more and more involved and smarter, I think AI is going to be turned on a lot of that too. So there could be innovations in that, but I'm not counting on that part. But there could be. So, yeah. If things don't change, yeah, I could see what you're saying. But if we do get some of the changes that I see coming, I think it may become a moot point. So just something to think about. Just something, one of us is right. Um, I mean, I hope it's me because I love technology, but I'm more than willing to admit that it could be you too. All right, the beaver. Yes, we got the beaver. ATD and MEQ are perfect examples that stocks sometimes don't always go up. Yeah, absolutely. Sometimes, yeah. I mean, look. I mean, Alimentation Couche-Tard, they've been struggling ever since the 7-Eleven bid didn't go through. Now, I don't think they need to suffer. I think they're still one of my favorite stocks. But yeah, they've definitely been struggling. And I hope they go up soon too. Futures are now open. Nice. Let's see. That looks too late to buy C&Q after the run with oil and natural gas down. Yeah, I still love C&Q, Michael. I'll still buy more. Well, right now I'm kind of over diversified in the challenge on them. Let's see. Is ATD an oil correlated stock? No, it really isn't. So ATD, Alimentation Couche-Tard, they're basically, they're convenience stores. So you've got Couche-Tard, you've got Bigfoot. There's a whole bunch of different brand names, but they're one of the biggest convenience store chains in the world. They would, if they had gotten the 7-Elevens, they would have been the biggest. Now, when you talk about oil correlated, and I want to I said no, but at the same time, obviously, product going to the stores will certainly be impacted by the price of gas. Everything is. So there is a tiny correlation, but everything has that tiny correlation, really, if there's any kind of transport involved. Scott says, I sold my C&Q to get in on the Microsoft dip. I think Microsoft has a better chance to gain. I sure hope so. I am still in that dip, so I wanna get that. I'd like to see Microsoft have a great week, and Tesla and Google. Those three. If those three have a great week, I will have a great week. Scratch says, what a great time to be alive. Yeah, I like quite literally, and I said this the other day. I wish I had been born 20 years after I was born, because that way there I could live through to see. I'd love to live through to see the next 50, 60 years, because oh my God. And maybe if I can, depending on age, some of the age type, what do we call them? Age technologies, anti-aging technologies, all of that. There's a chance I could live to be a lot older than I think I'm going to get to, but we'll have to see. Right now, it's not close enough for me to be comfortable. AGD, hello Candace and the gang. Just got in. What are the ETFs that you are looking at now for income generation? Thanks. Well, that's a pretty broad question. All of them. We're looking at all of them. There's a lot. There's a lot of different ones. Coming up in next Friday's video, we'll have HHIS and QQCL. So those two are going to be featured in that video. But there's a lot. HDIV, of course, all of the new Global X ones. So you got the silver ETF, you got the copper one. You've got, of course, the gold, and there's a leveraged version. There's a ton of them out there. So, like I said, very broad question, AGD. Pathfinder, regarding ATD oil correlated. Okay. let's see, and hope Amazon has a great week too. Yeah, yeah, absolutely. Michael says, I was looking at CNP a few weeks ago, but my chance was a few weeks ago, but buying at the high is the wrong time. Yeah, sometimes it is. Let's see, ATD own a lot of those stores at the gas station, so they kind of are. Yeah, you know what? That's a good point, Scott. Absolutely. So, yeah, obviously, yeah, I wasn't really thinking so much about that, but yeah, you're right. I stand corrected. There's more of a correlation than we thought. Yeah, absolutely. Let's see, regarding ATT being oil correlated, I was thinking that they may have higher margins in the gas price as well as more visits from people that don't want to fill their tank all the way. Okay, fair enough. Yeah, I mean, absolutely. I mean, yeah, I totally blanked on the whole gas station part of it. I was thinking so much like not all of their convenience stores have gas stations, but a lot of them do nowadays. And Hughie Melio says, I believe it is a crime to hold cover call ETFs in an RRSP or RESP. I wouldn't say a crime, but here's the thing about, like, let's look at the RRSP for the moment. If you're an income investor, putting income ETFs in an RRSP doesn't make sense, and I'll tell you why. I mean, what you want to look at is in an RRSP, you want to put in whatever's going to make the most money, because no matter what you put in it, it all becomes 100% taxable. So if you're sacrificing upside to get income, it doesn't matter in in an RRSP, because it all just becomes taxable anyway. So the only rule in the RRSP is total return, with, of course, the exceptions. If you do have a US ETF that's giving you a really big amount of income, you probably want that in your RRSP. Otherwise, you're paying 15% of that dividend right back to the IRS. So yeah, I kind of look at it that way. Is it a crime? Well, no, it's not. There's nothing in the Canadian Criminal Code against it, that's for sure. But you know, it's not the best move. It's not the best move. You know, a couple of exceptions, like HDIV, because yeah, it has income, but it has a lot of growth. That could make sense. That could make sense. But keep in mind, HDIV had a great year in 2025 and appears to be in 2026. We don't know what 2027 will look like, but you could always sell it in your RRSP and put it into something else if things start to look different. All right. Thank you, Candace. Futures. So US 500 plus 0.26, US Tech 100 plus 0.27. Yeah, kind of what I'm thinking. Like I said, I kind of think, I'm hoping we're going to see a continuation of Friday tomorrow. See more green to the upside. Now Bitcoin, I know Bitcoin's kind of been moving kind of a little sideways here, but let's take a quick gander. See if we got any changes here on our Bitcoin here. Oh, we do. Yeah, look at this. We had one little wick to the upside here. Uh-oh. All right, come on. Okay, there we go. I think oh, yeah, it's going to let me do it. There we go. Perfect. Yeah, we had this one wick. Now, it has retraced a little bit, but I like that up around 72. That would be nice. Now, Larry earlier was saying that he's thinking between 70 and 80 for the next couple of weeks. So I do like that as well. Does the RRSP have a 30-day rule? Nope, no rules. And the reason for that is that everything's 100% taxable. They don't care. You could day trade in your RRSP. They don't care, because they're getting 100% of that tax. So the reason that the rule is in the TFSA is that, you know, you're getting that special tax exemption. So, and it's designed for people who are saving, hence the S part in the TFSA. It's not designed for you to be, you know, making income with it. In the case of the RRSP, like I said, because it's 100% taxable, they don't care, because they're getting tax on everything you make. So if you're in the RRSP and you're day trading and you make $1 million, the government's happy. They're getting all of that tax money from it. So they're happy. All right, agreed. Let's go green next week. Yeah, absolutely. That's what I'd like to see. I'd like to see a nice old green week for sure. Okay, guys, we're at 2 hours and 15 minutes, so we're coming up towards the end. We're not there yet, but if you got any last minute questions, that are burning a hole in your question book, get them in right away. That way there we get those out of the way. Then we'll see. Doesn't mean we're at the end. Sometimes we go, I've had times where I've called on the last question and then you guys all exploded and we kept going for another hour. Well, who knows? I don't think we're going to 3 hours and 15 minutes today, because it is the Super Bowl. And I'm sure some of you guys are hoping, I don't know. Are you guys got a favorite for the Super Bowl? And maybe I should preface this by who is in the Super Bowl, because I don't know. Tell me the two teams that are in the Super Bowl, and I'll tell you the winner. Or I'll take a guess at the winner. And maybe because I don't know who they are, my guess might work, or just be dumb luck. Who wins the Super Bowl? It's going to be a football team. That much I know. Scott says it's the advertiser. Yeah. Oh boy. Yeah. There's some. I've watched a few of the ads already. Yeah. Claude. I think it's Claude. Has put out a line of AI. One's about ads in your AI chatbots, and some of them are funny, but kind of misleading too, because I know OpenAI, they said that they were going to show ads with their chatbot, so with ChatGPT. But it's just going to be ads on the side. It's not going to be ads in your answer, and that's kind of what the Claude ads, they kind of insinuate that there's going to be ads like in your answer, like your answer will all of a sudden turn into an ad. That's not going to happen. Okay, let's see. Will, interesting to see what strategy is at tonight at 8 p.m. with Bitcoin up from, yeah, absolutely. The poultry industry from Friday's close. All right. So guys, like I said, I absolutely don't know. Steve says, can we see the Christmas goat? It's my favorite. I retired the Christmas goat. But yeah, I love the Christmas goat. I probably will save it for next year, though. But yeah, right now, even if I wanted to show it to you, I can't because I deleted it from at least from StreamYard. I'd have to dig it up and re-upload it to bring back the Christmas goat. But maybe in July we can bring it back for a Christmas in July thing for you. So if you can wait till July, we'll bring back the Christmas goat. Pathfinder, I hear that they have many kickbacks from recommending products. The Super Bowl winners? Probably. Let's see. I wished YouTube had, are you sure you want to send your message? There is a send button on the keyboard. Yeah. Retired as in Blade Runner retiring replicants. Oh, right. Yes, yeah. Well, that could be coming. I don't know. Samantha says, I'd love to have another goat that made you laugh like the Christmas goat. Oh, that was so good. That was so funny. I know. There will be. I will try to, you know what? I will try to make, sooner than later, I'll try to make a seasonal goat that makes me laugh. That could be harder, though. Harder than I expect, but I'll try. Sorry, AI engines will have kickbacks when they recommend ads. Oh, okay, yeah. Well, it's not just that, too. I mean, yeah, I can understand. You know what? OpenAI is operating at a massive loss. So, yeah, I can see them bringing ads in, just even, get a little bit of money. Get a little bit of money. Yeah, Steve says July is better than December. Yeah, there you go. So we'll do that for July for sure. What can I say? Holy banana bread. I like that. I like it. Yeah. And I think after the Olympics, we're probably, I am going to need an Easter goat, because I think Easter's pretty early this year. I think. Something makes me think that Easter is Easter in March this year, guys? I think it might be. Oh boy. Let's see. What do you think on MTCH, that report earnings? I think on Thursday, or Chewy that has a bounce Friday. I don't know, Michael. I don't know. MTCH. I have a feeling that it is a US one, so I'm just going to pull it. I'll pull it up in here. I think I got room. MTCH. Oh, let's try it. Let's try that again. MTCH. Match group. Okay, here we go. I don't have room. Of course I don't have room. All right, let me get rid of somebody. Who can I get rid of? That's my problem. Actually, you know what? I wonder, I'm going to go to my bank list. Let's get rid of Laurentian. Actually, I'll get rid of all my banks because I had that for when I was making, there we go. Now that I've got nobody in my banks list, let's go back. And this is kind of this is an experiment, guys. I don't know if that means if it's like cumulative. So now, because if it's not cumulative, I got an idea. All right, let's try this one more time. MTCH. All right, now let's add it. Oh, it is cumulative. It's per one. All right, okay, fine. I needed to learn that. We're just going to go over to we'll go over to banks and there. I should be able to add in here then. All right, MTCH. There we go. Perfect, perfect. Okay, so I can make. Oh, I could remake this one into something like maybe we could put all of our tech ones or our ones that we're watching or swing trading ones. I don't know. But anyway, okay. MTCH, here we go. Holy banana bread, look at this. So here's their earnings. Yeah, look at this. They beat on earnings by 17.28%. They also beat on revenue by a little bit. But look at what happened here, guys. Wow, this is interesting. So, all right, here we go. So here is, so they ended. Well, this is odd. This is kind of odd. So I'm looking here. And so this is Wednesday. This is definitely odd. And I'll tell you why it's odd. Because they ended Tuesday down here. So here's what I'm thinking. Oh, this is what I'm thinking. So these earnings dropped. I had to think to figure out what happened here. Because normally, I think we have a gap in here. All right. So I think the gap is here. I think they opened up here, and then they fell all the way down. So this is the gap. The gap is there, but it's kind of hidden on this one. That's, oh, my head's in the way, guys. So I apologize. Let's move my head over there. So yeah, I was looking at it. Initially, I'm like, wait, how is that possible? But then I'm like, realized, yeah, so they closed here, and they gapped up to here, and then they fell all the way back, like right away. So that's interesting. But they then rebounded, and we went up. So yeah, not too bad. That's a really interesting reaction. So why? So obviously everybody loved that 27%, and then it fell really quickly. So I'm not sure exactly why that happened, but that is kind of interesting to see that it did happen. They recovered and they did fine after that, but that's an interesting one. All right. Mardi Gras goat. I think that's, yeah, Mardi Gras goat. Oh, that's right. Does St. Patrick's Day come before? It might, because I think Easter's towards the end. So yeah, we might go. All right, so we'll go from Valentine's to Olympic to St. Patrick's to Easter. All right. Oh, I don't know when Mardi Gras is. I'm going to have to figure this out. I'll have to figure out when all these holidays are, guys. All right. Imagine the St. Patty's goat dancing a jig. Yeah, with green beer, maybe. Well, I don't know if I want to encourage green beer, but yeah, we can do it for that. Easter. Oh, April 3rd to 6th. Oh, is it really April? Okay. All right. What about a TSX beaver beating an eagle? Maybe a little bit too violent, Scratch, but funny but violent. There were memes like that, all with a cobra chicken. Oh boy. So Easter, April 5th. There we go. Lots of awesome goats come. There's going to be, absolutely. And I did put, actually, there is one of the goat. The cute goat is currently on the merch shop. So I'm going to get the other one up there soon. Probably, hopefully before tomorrow's show. Do you make those swing trades in your TFSA? No, I do not. So in my TFSA, I have that one long-term swing that I do, and that's that Air Canada one. That's that one where when it's under 19, I add to it, and I just recently sold it because it went over 21. So there's a $2 range on that swing, but it's a very long-term one. And now that I've sold it, I'm going to wait 2 months before I start up a new one. So, I'm very careful in that. But yeah, the other, all of the other swings are not in a TFSA. Yikes, that would be bad. That would be bad. I trade pretty regularly, so that wouldn't go good. Scott says Mardi Gras Fat Tuesday is next week. Oh, if Mardi Gras is next week, we're gonna have. Oh, now we need the Olympic. We got to show our Canadian spirit. So yeah, we may not be able to do Mardi Gras because I want to keep the Canadian one until we can celebrate Team Canada winning some gold medals. Hopefully, a lot of them. So what can I say? What do you think on on Chewy and Levi? Look, that Chewy price target is 48, but been dropping until Friday. All right, I'll take a look. CH, because I can do it here. CHWY. Here we go. Chewy. Boom, bang. Nice. Yes, I love it. I can actually, this is great because then I can just, yeah, or I can just use this for throwaway stocks. And throwaway just meaning ones that we don't regularly look at, like Chewy or Match. Yeah, here's Chewy here. Let's take a look. Oh, yeah, you're right. They have been, did you say they had an earnings, Michael? I don't see it. I don't see it here. But, yeah, they have been, yeah, they haven't had a good week. They haven't had a good week at all. All right, and I honestly don't know what Chewy does. So, Chewy shares plummet, what you need to know, and cars.com. So do they do stuff like that? Are they kind of like, do they sell cars, Michael? I don't know what they do. So, you're throwing this at me and I've never heard of them before. So, let's see. Steve says, speaking of Easter, I have a pet rabbit. Christmas goat showing and I will change my avatar to my bunny. Nice. Nice. A pet rabbit. I like rabbits. I like rabbits. We have a wild rabbit that comes around every so often. Joe puts nuts and things out for the rabbit, and the rabbit just has them. But yeah, every so often we get that. Like in the summer though, we had couple of wild ducks that showed up on our lawn every night for like about I think it was 3 nights in a row. But what can I say? An April Fool's goat would be awesome. All right. Oh boy. I might have to make 2 seasonal goats the way you guys are going. Chewy is pet supply. That makes a lot more sense. That makes a lot more sense because yeah, that does. Yeah, I don't, like I said, I don't have any real background on what's going on with Chewy. So normally if I've got like an earnings, like I can look at this here, for example, this here is just some of the latest updates. So we know, well, a little bit of information here. Let's see, Chewy announces retirement. I wonder if it has anything to do with the retirement of their chief technology officer. Sometimes a shakeup in, especially a successful company, if there's a big shakeup within the management structure, that can cause problems. But I don't know if that's the case that's going on here. Does this here give me any information? What happened? The sell-off was a reaction of news that the White House planned to impose. Oh, okay, here we go. So somehow it went back to the White House. 10% tariff on imports from 8 European nations. So France, Germany, and the United Kingdom starting February 1st. Oh, well, that's no longer the case anymore. So, and that's, let's see, January 20th. So that probably has nothing to do with it. Sorry. I grabbed it. It was the top story. So yeah, there's really no information here to tell us what's going on. Yeah, pet food, exactly. Scott says, be careful with rabbits. They could attract coyotes, not as much as roadrunners, but still. Yeah, it's just this one rabbit. And it's a big rabbit. Like, it's almost as big as our cat. So, as one of our cats. What can I say? Let's see. Chewy was already selling off before that news. Yeah. So, yeah, I don't know what is going on with Chewy, unfortunately. So, And that's the thing. Sometimes, you know what? I don't pay as much attention to all of the companies in the United States. I try to pay attention to the ones that impact Canadians the most. But, so sometimes I don't mind looking at U.S. stocks, guys. Don't mind at all. Just keep in mind, always keep that in the back of your mind that, I'm going in, most times, I'm going in completely with a blank slate, with no idea. Sometimes it's a company. You guys love to throw companies at me I've never even heard of, and that's cool. Now, I have heard of Chewy before, now that I think about it. So, what can I say? All right, guys, holy banana bread. Well, we hit that 2 hour, 30-minute mark. I think this is a good enough time to close out for the day. We will be back tomorrow. We will be back Tuesday. We will be back Wednesday. We'll open up the Financial Express for the Thursday show on Tuesday. So I can't wait. Until next time, guys. You guys have been awesome as always. And thank you, of course, to Samantha, Mary, Wahipple, Paul, and Scratch for putting the Goat Squad in front and center, bringing the Goat Squad front and center. I love it. All right, guys. Now, I do have one last thing I did want to say to you guys before I leave, and that is, well,